very clearly that my information is that the FSA did not advise or require these deposits to be made. Furthermore, I understand these discussions did not extend to the giving of any specific assurances by the FSA, for example, that KSF UK would be able to repay the money, or that KSF Isle of Man would be treated preferentially in the case of an insolvency. And at all times, the supervision of KSF Isle of Man has remained the responsibility of the Isle of Man authorities. The FSA has had no power over it. My understanding is that KSF Isle of Man had some £532 million of deposits in KSF UK, and they can be expected to recover a proportion of this from the insolvency process. It is my view that, given the lack of clarity that remains about the winding up of KSF in Iceland, depositors of KSF Isle of Man are likely to be better off than if these sums had been deposited with the parent company. But under UK insolvency law, KSF Isle of Man ranks like any other creditor of KSF, and KSF Isle of Man will have been fully aware of this. It could have chosen to put its money elsewhere. Indeed, KSF Isle of Man was only one of a number of depositors with KSF UK that was not protected by the UK Financial Services Compensation Scheme. Other depositors included local authorities and building societies and indeed charities. The FSA could not have given KSF Isle of Man advance warning of events any more than it could have done so for other parties. To do so would have been highly inappropriate. On the question of whether depositors in the Isle of Man or Guernsey had any choice in the matter of opening offshore accounts, or whether non-UK residents are forced to open accounts offshore, I can confirm that this is not the case. There is no legal bar under UK financial services regulation that will prevent a non-UK resident individual opening a new bank account here. Where an account is opened remotely, more onerous anti-money laundering checks are quite properly required because of the increased risks involved. And this may well be a factor in the willingness of some UK banks to offer new accounts to non-residents. However, this would not be a burden for customers who move offshore but wish to retain existing accounts. The point was made about Derbyshire offshore, and I want to be clear that no member deposits were moved to this subsidiary by the Society, other than on the instruction of the member depositor. Depositors in Derbyshire offshore would not have been covered by the UK Financial Services Compensation Scheme before they were transferred to Captain Singler and Friedlander, and it remains the case that when they were transferred, they were regulated by the Isle of Man authorities and would come under the Isle of Man compensation scheme. With regard to the issue of the corporate bonds and similar debt securities issued by banks are not covered under deposit rules because they're investments rather than deposits. And if a bondholder suffers a loss as a result of the failure of the bank which issued the security, they may, for example, have a claim against an advisor who gave advice in relation to the purchase of the bond. And if that advisor were in default and unable to meet that claim, they would be protected. There would be a protected claim under the investment business rules of the FSCS, which would be paid by the FSCS subject to the relevant limits and the normal eligibility conditions being met. My honourable friend also raised the question of Guernsey, and certainly it isn't my understanding that depositors in Guernsey lost everything when Landsbanki went into administration on the 7th of October. I should say again, first off, that this entity is regulated by the Guernsey authorities and therefore outside the UK Financial Services Compensation Scheme. The administrators have already proposed a part payment to depositors equivalent to 30p in the pound, and they've said that the prospects for further repayment to depositors are good. I've tried to address the main points raised by my honourable friend for Wakefield, and I sympathise with the situation that her constituents have. Council Singer and Friedlander Isle of Man is a matter for the Isle of Man authorities, and as she's aware, PricewaterhouseCoopers have been appointed as provisional liquidator. They are engaging directly with the administrators of KSF in the United Kingdom, and depositors with specific queries should contact the provisional liquidator and the Isle of Man authorities. Given the issues that she's raised with